Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking in on the market. So we had a hold of support today. Started the day with some weakness. The bulls bought the dip and closed near the high of the day. What we're watching is this channel on SPY that we've been in for 6 days. And in my opinion, it's probably going to take a reaction to either the tech sector earnings, which are going to get into gear Tuesday, Wednesday, Thursday, or Wednesday, the Fed, 2 p.m. Eastern, is also likely going to have a significant impact. So I wouldn't be surprised to stay within this range until Wednesday. But we are going to have some reaction on Tuesday to tech sector earnings, so that could be a catalyst as well. We did already break bearish on oil. We dropped to a lower low, lost the daily uptrend. That is a potential indication that can allow us to shift our perspective and say, hey, maybe it's a little bit more likely now that we're going to break this support level because oil already has done that. And we'll get to oil in just a moment here. But basically 260.66 to 266.98 is the range to be watching on SPY for this week. If we lose support, we lose the daily uptrend, and we zoom out to the weekly for weekly consolidation. If we break resistance, the daily uptrend remains intact, the bulls remain in full control, and we set our sights on 269 resistance. IWM is the same pattern. Bulls closed near the high of the day as well. We've been within this range for 6 days, and the range is support of 143.46 and resistance of 147.92. We're looking for a break of that range to indicate short-term direction as we head into the end of this week, or into the middle of this week. QQQ, same story. So everybody is so significantly correlated, just like they were all last week as well. The range here is 160.32. Resistance is 166.02. Tech sector was weaker today, pulled back more significantly, and it was the financial sector that held on very strong. So for the financial sector, it is not the same as everybody else. We have a higher low and higher high. So we already broke this resistance on the financial sector. We have not done so on any of these other markets. So that's a distinct difference as well. Key support is 25.44. As long as that holds, the bulls keep complete control of this daily uptrend. 26.17 is resistance. If we're going to see weakness, if we're going to see bear breaks on SPY and QQQ, we have to see the financial sector break bearish as well for any kind of significant follow through on that consolidation. If financial sector holds on fine while the tech sector pulls back, it's going to be a pretty limited pullback on the S&P 500. And last we have VIX with another lower high being set. Anything under 22.02 is a lower high. We topped out at 20.42. And we do still have this base of support, 17.17. Things are going to tighten up. Let's look at it on the 4-hour time frame. Perhaps a bit of a descending triangle where we have our support, top of the bounce, double bottom, lower high. Let's see if we head back down towards the low $17 support. Here's oil on the daily time frame. So here's the distinct difference where we had the same setup last week, but we've already broken support this week. Didn't get a ton of follow through, but it is still a clear bear break, losing the daily uptrend. So at this point on oil, we were watching this range, which broke today, and we're now looking at weekly consolidation. For the last month, we've been pointing out the potential of the inverse head and shoulders on the weekly time frame. If we couldn't break 54.54, we were looking for a lower high to form and consolidation on the weekly to try and form a right shoulder. So now we're getting our consolidation, and the bulls need a clear break after a higher low is established here. A clear break of 54.30 and 54.54 to change this weekly trend, which will be significantly notable because if the S&P 500 changes its weekly trend, we're looking back towards the all-time highs. So oil doing so would only, again, increase the potential chance that the S&P 500 will do that as well. So lower highs and lower lows still intact. We need the higher low of the right shoulder and then the break of these necklines of resistance to change that weekly trend. NATGAS, bear flag on the daily time frame confirmed. This is now about the third time in the last maybe 5 weeks that Sunday night has been an all-out dump in natural gas. Bear flag on the daily confirmed, all about 2906 support. Only thing the bulls have going for them is that support level. It's a potential bottom fishing play where you enter bullish and exit if that level breaks, but certainly be sure that your hands are not tied with natural gas trading in extended hours. And if you're in a common stock position and your broker is closed in extended hours, you're going to be stuck. So if we break 2906, the next support is down at 2767, a long way down. As far as resistance goes, a weak bounce attempt at this point, $3 psychological is resistance, then 318 is after that, but it's all about support. Bulls have to hold 2906 to see any kind of shift in momentum. If we break that support, bears are back in complete control of pretty much every time frame of natural gas. So that's where we stand. It's these tight ranges on SPY, IWM, and QQQ on the daily time frames. We're looking for a break probably on Wednesday, but could see if we get significant reactions. Today we had a very significant reaction in the semiconductor sector, NVDA, AMD, MU. We had NVDA lower guidance and dump almost like 18% at certain points. I played that oversold bounce, but it was just a very clear sentiment shift marked by the lowered guidance by NVDA, who again pointed towards macroeconomic events, essentially saying, hey, this trade war with China is going to hurt our numbers going forward. And the more companies that do that, the more we're going to see bearish reactions and the shift from this extremely bullish sentiment perhaps to lead to weekly consolidation. So it'll be very interesting to see what the tech sector earnings are, not necessarily what the earnings were, but what the guidance is going forward. And if they have low guidance, if they attribute it to the trade war with China, that could increase, market fears again, which have all but disappeared at this point. Appreciate you watching. We'll check back in tomorrow. Have a good rest of your night.